what's your take on the current market activity and what we're expected to see in terms of trade today, where things really seem to have simmered down as we approach year end?
Well, as expected, we are seeing a slowdown. It's flattening now, and I think most of the focus now will shift towards the KPLC rights issue, which is going up towards the end of this month. For now, most of the stocks are really going to be looking flat. We expect that most activity is going to pick up towards mid-January and February, when we start anticipating the end-of-year results from the financial sector.
For now, we do have that financial sector staying firm, the sector as a whole outperforming. We've got a couple of obvious factors at play here. We've had earnings reports quite positive, the recent ones that were released, and we've got optimistic economic growth forecasts for the country as a whole as well. When it comes to drivers behind the financial sector right now, is it as simple as that?
Well, yes, there's a strong borrowing. Our economy is on a recovery path. I think we are seeing banks now begin to stick the neck out, and I think we are going to see the less conservative banks do very well over the next year. And of course, with their final year results, we do expect the financials for the less conservative banks and the smaller SME lending banks are definitely going to lead the pack. The more conservative ones, of course, are definitely going to suffer, since now we've seen a resurge in the economy, and usually that reflects on the banks that take the risk and lend more heavily.
Well, in the meantime, we've had Kenyan tea and coffee grower Sasini report an 82% jump in pre-tax profit this week, while revenues grew 5% and earnings per share more than doubled to 4 shillings 30. But the company not really spelling out any real reason for that extensive rise that we did see. What did you make of those numbers?
Well, I think we've had very fair weather this year. We've also had the shilling has also been, a bit favored them to an extent. So I think those are some of the factors that would probably have affected it. But Sasini have also gone and diversified into the retail market, and so I think once we see their financials, we're going to see that that side of their business is definitely going to have affected their bottom line.
Of course, as you've highlighted this in a context where agricultural firms have benefited from the good weather and higher international prices as well. Having said that, Kakuzi's been dropping back off late. Yesterday's 3% gain aside, as investors deem the stock too expensive after more than doubling its value so far this year. What's your take on current valuations on Kakuzi?
Well, probably a bit of profit taking. I think as we go forward, Kakuzi has a very big element of property on their balance sheet, and probably that's where the speculation is coming from. But I think it's going to flatten out as we go forward.
Would you be a buyer then only when that share price dips, or will you be staying back? Because we know that these are counters that face the challenge of low liquidity.
Well, apart from low liquidity, they are very cyclical in nature. So usually we need to watch all the different factors, including the economy, the exchange rates. And I think as we go forward with the agriculturals especially, and with a lot of weather forecasts looking bleak and at times not coming out exactly as they are forecast, I think we are really not sure where we stand with them.
On the flip side, we've got a counter like Safaricom camping at 4 shillings 50, and the price well overdue an oversold bounce. That's in some quarters the kind of commentary we're hearing. From what we've been hearing, especially since its latest results, what are you making of valuations there?
Well, I think at the moment investors are looking at what direction Safaricom will take. I don't think it's really an issue of valuation, rather than now that there's been a change of guard and what sort of new strategies Safaricom is going to come up with, and also being a very innovative company in the past, whether they're going to go back and continue in that spirit. Of course, we have the entry of Airtel onto the Kenyan market, and I think that is also informing some of the decisions that investors are making at the moment.
Let's look at Bamburi, one of the stocks to have been singled out in terms of its performance this week. Yesterday rising a further 0.5%. Any particular reason for the move higher that we've seen on this counter?
Well, again, we go back to the economy. The fact, usually with industrials, when the economy is good and we've already seen the financials do well, then we look at the cyclical stocks, and cement will tend to follow suit, you know, after a while, and I believe that there is a bit of speculative behavior on those. So I think that we are going to see most of the industrials show good results as we go towards the end of the year, and I believe investors who are looking for dividends will definitely be moving into that sector now.
Of course, this is a company that enjoyed a once-off capital gain in those full-year results related to the sale of its share in Athi River Mining. How does Bamburi, in your books, stack up against the likes of an Athi River Mining?
Well, Athi River Mining is a much younger, much better, in my view, managed company. So I still consider Athi River Mining more of a buy than Bamburi. Bamburi, however, has a lot of the government contracts, and that actually gives it an edge over the other cement companies. All of them have a bit of an element of Lafarge in them, but I think at the end of the day, it's about the sort of contracts they have, and of course, whoever is going to open up the Southern Sudan market is definitely going to be the biggest grower.